According to the Ag Economy Barometer, the outlook for farming improved in March. Do you agree with that assessment? We'll get into the details of the barometer, and it's time for this week's Farmer Forum. We'll find out what is making the gears turn for Ben and Glen.
Live from Hump Day Base Camp via Farm Journal broadcast, this is AgriTalk. This morning we begin with a conversation with Dr. Jim Mintert from Purdue. Then it's our Farmer Forum with Ben Riensche and Glen Newcomer. Directly following the news, Margie Eckelkamp from The Scoop, I'm handsome newsman Davis Michelson. Now, the host of AgriTalk, Chip Flory.
All right, Davis, thank you so much. Here we are. It is the 3rd of April, and we are looking at 35 degrees.
Okay.
It's damp out there. There's some moisture that's flying around. I don't think we're getting any snow right now at the moment. No, it doesn't look like it. Still could happen yet today. But, dude, we have got 30-mile-an-hour winds with gusts to 50, 55 miles an hour. It is a gnarly day out there, no question about it. What you got?
My computer just says cold weather where it usually says the temperature.
Yeah.
I think last I saw it was 42 degrees. The sun's trying to come out down here. I think we're on the southern edge of something here, I think.
Yeah, no, dude, there's not a lot of effort by the sun here. Not right now anyway.
He's not even trying.
No. But see where we are at, where the bunker is at, we are right on the western edge of this rotating low, a stationary low, that looks to be creating some problems for Chicago area right now. All right. And we've also got storms moving up into New England and in the southeast as well. So we've been dealing with it for 3 days now. And it's going to continue to be an issue for us. Welcome to AgriTalk. Glad that you are with us. One of my favorite days. We get to have a conversation with Dr. Jim Mintert from Purdue University. We'll talk about what's going on with the Ag Economy Barometer. And then how about that for the Farmer Forum? We've got Ben Riensche and Glen Newcomer on the show here this morning. Okay.
She's a beaut.
Let's get to it.
Well, I'm going to start with the National Weather Service weather. Heavy rain and severe thunderstorms will impact portions of the East Coast today. All hazards are possible, it says, with damaging winds and hail being the main threats. Heavy wet snow will persist across Wisconsin and upper Michigan into Thursday. Snow will move into northern New York and New England late Wednesday through Thursday. Moderate impacts to travel and power outages are expected. All hazards are possible. Chip, let's be sky aware in these areas.
Yeah, absolutely. And think about where some of the major airline hubs are. There's going to be some disruptions to flights and so on.
Well, the Key Bridge disaster in the port of Baltimore was not the first to hit agriculture and other industries, and may not be the last unless protective measures are taken, says one farm senator. 19 major bridge disasters have taken place since 1960. Baltimore, just the latest. Iowa Senator Chuck Grassley says, given the hit to agriculture, more bridges need protection. He had this to say.
Protections around the structures that hold the bridges up. And I think some of the bridges already have those protections, but not every bridge has a protection, and that's what needs to be looked at.
Chip, just a couple of factoids here. Roughly, total U.S. ag exports by quantity out of the port, 0.4% by value, or 0.3% of total U.S. ag exports. We've talked about this. This is not a huge ag exporting location. However, infrastructure and whatnot.
Oh, it matters. And there are some industries that are going to experience some supply chain interruptions because of this. So, but what Senator Grassley is talking about is riprap. Let's get some riprap and artificial reefs around those bridge supports. Yeah, it's bottom line.
Well, Chip, the Purdue University CME Group Ag Economy Barometer shows an improved outlook for U.S. farmers during March. The index rose, a slight increase over February. The index of current conditions fell. Index of future expectations climbed compared to February. We'll get more from Dr. Jim Mintert on this in just a moment. Texas Agriculture Commissioner Sid Miller confirmed that the Cal-Maine Foods, Inc. poultry facility in Farewell, Texas, has received official notification of a positive test for HPAI. Cal-Maine will be required to depopulate 1.6 million laying hens and 337,000 pullets at their facility. This, as Mexico's agriculture ministry said it is taking preventative measures to increase surveillance and reinforce inspections of U.S. livestock imports after highly pathogenic avian influenza was found in dairy cattle. Bond traders priced in less monetary policy easing by the Federal Reserve this year, briefly setting the odds of a first cut in June at below 50% after a gauge of U.S. manufacturing activity showed expansion for the first time since 2022. In other news, EPA issued a notice detailing the final conditions for dicamba product usage after revoking the registration. The agency defined existing stocks as products registered before February 6, 2024, and laid out timelines for the end of sale and distribution ranging from May 13 to the end of June, depending on the state. Final use dates vary from June 12 to July 30 across different states. Best to check with your FSA office, I guess, Chip, maybe on the dicamba stuff?
No, I think I would talk with your retailers.
Ooh, all right. All right.
I think that's probably who you're going to have to go to on that, I believe.
That's a good thought. And finally, the strongest earthquake in 25 years hit Taiwan overnight. Around 26 buildings have collapsed, according to Reuters. More than 50 people sustaining injuries. U.S. Geological Survey put it at a 7.4 on the Richter scale.
Dude, when I heard the worst earthquake in 25 years, I was thinking, any loss of life is tragic. I get it.
Sure.
But I thought the numbers would be in the hundreds, if not thousands.
Yeah, I kind of did too.
So to hear 50 people sustained injuries, that's encouraging. Thank you, Davis.
You bet.
All right, let's bring in Margie Eckelkamp, editor of The Scoop. How you doing, Margie?
Hey, Chip, doing well this morning. Trying not to blow away myself.
I hear ya. So the technology trends in ag retail, what is most engaging for the guys now?
Yeah, so we've been talking about this idea of smart farming, and that really is about the technology, the software and the hardware, but it's also about your mindset, whether you're a farmer or an ag retailer. And I thought it was a great opportunity to highlight 7 technology trends, kind of, issues that I think will impact everyone going forward. So those 7, especially for ag retailers to consider about not only how they're using the technologies, but how they're approaching them. So the first one would be selective spraying. So we're seeing a lot of green on brown as well as green on green spraying solutions. They are picking up a lot of steam. This will really be the 3rd year that they're commercially available for the spring season. The second one is going to be data analytics. So not only having the data, but using the data to inform decisions, really taking the analytics that you are pulling from these data pools you have either as an individual farmer or as an ag retailer and how they inform your business decisions. The third is more connectivity. I think we all can agree that we are more connected in our lives every day, and whether that be via wireless data transfer or other applications, I see huge implications going forward. Prescription inputs, streamlined ways to do business, gene-edited crops, and sensors out in the field wrap that list up.
Perfect, Margie. Thank you so much. We'll talk to you next week. Margie Eckelkamp, editor of The Scoop. We've got Jim Mintert next.
You're listening to AgriTalk, where the conversation begins. Join us at 855-4-TALK-AG.
Welcome back to AgriTalk. I'm Chip. Glad that you are with us. It is time for our monthly conversation with Dr. Jim Mintert, director of the Purdue Center for Commercial Agriculture. He's also an Ag Econ professor there at the University of Purdue. And I don't know if there's any truth to this, Jim, but did I read somewhere that you are in the running for the #1 Boilermaker heading into Saturday's Final Four?
Well, I don't know if there's any truth to that either, so we'll find out, I guess. I think Zach Eady's the #1 Boilermaker.
There you go. There you go. Exciting time, isn't it?
It is exciting and long awaited. I remember, I guess I'm old enough that I remember the last time Purdue was in the Final Four. So it's great to see him back in it again this year.
There you go. There you go. That's awesome. Congratulations on that. I hope that there are other land grant universities that are soon to make their first appearance in quite some time in the Final Four. I'll just leave it at that. I'll leave it at
probably
that.
one that's located in Ames, Iowa. Is that what
Ames,
you're thinking
Iowa.
about?
That if you're looking for someplace on the map, we can go straight to Ames, Iowa.
but Iowa can be pretty happy about Caitlin Clark's performance last night.
Holy smokes! It's incredible.
That was fun to watch. Fun to watch.
It certainly is. It certainly is. There's no question. Okay. The Ag Economy Barometer that you do there at the Purdue Center for Commercial Ag, working with the CME group, and it showed a bit of improvement. Just give us the basics.
So it was up a little bit this month. The index was 114. That was 3 points higher than last month. And, in the ballpark of last year, I think it was 3 points lower than a year ago. The interesting thing from my perspective, Chip, was the fact that all of the increase was attributable to people becoming more optimistic about the future. The future expectation index was up 5 points compared to last month, and that was 7 points higher than a year ago. So it really had to outweigh the fact that the current condition index was actually down a little bit compared to last month and down substantially compared to last year. So that was interesting. And so one of our challenges would try to look at the responses to the other questions and try and see if we could ascertain, why did people become a little more optimistic? And, it's a little hard to say for sure, but I think the thing that we were able to point to the most was the fact that people became more optimistic about interest rates and interest rates going down over the upcoming year and potentially the impact that would have on the ag sector in general and ag incomes. Because, if you look at some of the other responses, although people didn't explicitly tell us it was interest rates, when you looked at some of the other questions, it appeared that the change in interest rate outlook did impact their viewpoints.
Okay. All right. I want to dig into this just a little bit more. It also suggests to me, Jim, that they feel like their current situation has bottomed out, at least for now.
Yeah, that's a good way to put it. I think the other way to express that, Chip, would be to say that they view the downturn that we've seen in commodity prices recently maybe as a bit of an anomaly.
Yeah.
At least from a cost price squeeze. I mean, I think what people are telling us is that they think the margin squeeze that we're experiencing right now with high break evens and weakening commodity prices is a little bit of a temporary phenomena. And you could rectify that to some extent with stronger commodity prices. You could also rectify it with weaker input prices. And people continue to tell us that they're very concerned about high input cost.
Right. Okay. Let's go back to those interest rates because there is some supporting evidence in the questions in the survey. Just 1/5 of respondents list higher interest rates as a top concern going forward, correct?
Yeah, that's true, but that's been fairly consistent over time. And if you look at it, the shift there has been number one concern, as long as we've been asking the question going back to the beginning of last year, has been high input cost. The shift has been more people are worried about lower crop and livestock prices now than they were this time last year. And then the interest rate concern a year ago was a little higher than it is now. It was 25% last year at this time. This month it was 20%. So people are still concerned about interest rates, and rightly so, because interest rates really haven't backed off. So the question is, are we going to see some declines going forward? And we did ask a question about that this month explicitly. We asked, what do you expect the U.S. prime interest rate to be 1 year from now? And the shift is quite remarkable. A year ago, or actually last summer, 30% of the folks thought that we would see an interest rate increase of 1%, and another 30% thought it'd be 1% to 2% higher. So 60% of the people in the survey thought rates were going up. This month, only 32% of the people in the survey think rates are going up. So I think that shift actually kind of spells it out a little bit. Fewer people think rates are going up, and more people think rates are going down than what we saw earlier. And I think that shows up in the farmland expectations.
Okay.
I think it shows up in the Farm Capital Investment Index as well.
Okay. All right. Well, the Farm Capital Investment Index is where I was going next with this. Tell us about the changes there. I mean, it's not like everybody is thinking that now's a great time to invest.
No, and truthfully, in our index, they never do.
Right.
We're trying to do some follow-up questions. We pretty consistently get anywhere from 2/3 to 3/4 of the people in the survey who say it's not a great time to invest. And I think part of that's because they're thinking about the prices of new farm equipment and whether or not their operation is large enough to actually support that. But we're trying to ferret that out with respect to some newer questions going forward. Okay. But this month, that Farm Capital Investment Index did rise 7 points. That leaves it about where it was this time last year. I think it's 1 point lower. It's quite a bit lower than it was 3 years ago. That index really had its peak in early 2021 when it got up above 90. So people are less optimistic than that time frame, but certainly more optimistic than they were a month earlier. And then if you look at the farmland index, which is correlated, the short-term farmland index actually jumped up 9 points. And that's a fairly big move for that index in a 1 month span. That left it 11 points higher than this time last year. And when you look at the returns, net farm income forecast, for example, for 2024, you think, why is that short-term farmland index going up? Well, the number one reason we could come up with was the expectations for some softer or weaker interest rates. And that would translate back to the capital markets, capital asset values, things like farmland, as well as having an impact on the investment picture for things like farm machinery.
Right. Okay. The one of the comments that you put in the summary, when asked why they expect farmland values to increase, more producers this month pointed to inflation expectations as a supporting factor.
Yeah, that's kind of interesting, and I don't have a good explanation for why they're saying that. I mean, I think that would suggest they were thinking about higher inflation, which would be the counterpoint to lower interest rates. So that one's a little hard to ferret out. I think, the big thing, people continue to point to non-farm investors, which is interesting to me, given that the relatively high percentage of farmland purchases are made by other farmers. But people continue to point to that as a supporting factor. That's been true as long as we've been asking questions. So it's going to be interesting to see how that shakes out going forward.
Okay. All right. Let's get to the I don't know, add-on questions here, because I think it's fascinating talking about the investment in the green economy out there with carbon capture and solar panels. What did you learn?
So the first question was, have you engaged in discussions? You or one of your landlords engaged in a discussion with a solar energy company or with a company about carbon capture, utilization, and storage? Solar energy, 12% said they'd had a conversation in the last 6 months, which was kind of interesting. That's fairly consistent with what we've been picking up in prior surveys. We've been around 8 to 10%, so 12% is maybe a small bump up. The carbon capture, we've asked this now a couple of times, and we've been surprised at how many people tell us they've been talking to somebody about carbon capture. 18% said that they'd had at least a conversation. That was, and thinking about the farmland stuff that we were just talking about, Chip, we're starting to wonder if the green energy, the solar energy, and the carbon capture is starting to maybe filter back into an impact on farmland prices. We're actually going to ask some questions about that this coming month. But the rates
when you look at some of the leasing rates out there, Jim, it would make people more optimistic.
Yeah, the rates are high. I mean, we asked the follow-up question. Again, we focused on the last 6 months because we thought we were getting maybe some older responses with respect to lease rates. And so this month, it's just saying, what kind of a lease rate were you offered for a solar energy project in the last 6 months? 54% of the people said that if they were offered a rate of above $1,000 an acre, and 27% of the people in the survey who had had a conversation said that they were offered over $1,250 per acre on a long-term basis. So those rates have clearly drifted up. We've been asking questions about rates for the last 3 years. Those rates have clearly drifted up over that time frame.
Yep, no doubt. Continue to look into what's going on with the Ag Economy Barometer. Jim's also got some interesting perspective surrounding this fall's elections in there. Jim, great stuff. Thank you so much, buddy.
Thanks for the opportunity. Look forward to visit with you next month.
All right, Jim Mintert, Purdue University. We got the Farmer Forum next.
Time for Markets Now with the experts from Pro Farmer.
Joining us now, Pro Farmer editor Brian Grady. Beej, green on the screen for corn and wheat here this morning. What's going on?
Yeah, just corrected buying, Chip. Outside markets are helping, especially the U.S. dollar. It's down more than 450 points at the moment. Crude oil futures trading to the upside. So both of those markets are lending support. And, we're seeing double-digit gains in wheat markets. Corn, not nearly as strong. It's trading 1 to 3 cents higher, largely because the soybean market's under some pressure, as is soy meal. And so that's limiting buyer interest in the corn market.
All right, what's going on in soybeans?
Not a whole lot, to be honest with you.
Yeah.
I mean, it's just, if they're covering shorts in corn and wheat, this isn't the type of environment where they want to be active buyers or even active corrective buyers across the grain and soy market. So soybean, soy meal, they're drawing the short stick so far this morning.
Yeah, and there might be a little bit of product spreading going on, but prices aren't moving that hard. We do have some hefty pressure back on the cattle complex.
Yeah, so big down day on Monday, with the late session, just absolute plunge. And then we recovered some of that yesterday, and we're giving it all back today, and heavy pressure in both live cattle and feeders here. And so the recent volatile trade in that market continues. Continue to monitor the bird flu situation in the dairy herd and seeing if there's any new news on that front. But need to watch for technical breakdowns here. If we fall below Monday's low, then we're probably going to face more technical selling. And then the hog market's just the opposite. Strong gains and new contract highs and deferred contracts this morning.
Gotcha. Thanks, Brian. Pro Farmer editor Brian Grady on Markets Now.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. On your favorite radio station or your preferred digital device, AgriTalk is live every weekday.
Welcome back to AgriTalk. I'm your host, Chip Flory. Glad you're with us on this Wednesday, which means it's time for the Farmer Forum. Let's get them in here. Ben Riensche, Eastern Iowa. How you doing, Ben?
Well, I want to say better than expected. It remembered how to rain in Northeast Iowa.
Awesome. That's quite an assessment to get things started here.
Well, there's a little inside joke in history there, Chip. I mean, I will use worse than expected as much as I use better than expected today. So.
Okay, good. Got to keep that balance. No question. Glen Newcomer over in Ohio. Glen, welcome to the Farmer Forum, buddy. How you doing?
Hey, it's good to visit with you again, Chip. It's been a little while, but I guess in Ohio, we've been more than blessed with enough rain through the past. And over the last couple of days, I think we've had a little over 3 inches of rain. So planting is definitely delayed for a couple of weeks in this part of the world.
How much have you had, Glen?
No, I'm serious. We've had over 3 inches of rain here just in the last 2 days. And so It's been the Ohio Valley. We've been really hit hard with a lot of unique storms during the month of March and here now into April. So, no, there's no field work going on over this way. We're totally saturated, and it's going to be a delayed planting start for us.
I'll be darned. Okay. So do you have water standing in fields over there and stuff like that?
Yes, I have lakefront property in my area right now. There's standing water in most fields, which we haven't seen that for quite some time.
Right. Ben, there's no standing water in Eastern Iowa, is there?
No, in weather as in life, if you'd take me and Glenn and put us together, you'd have two average men and we'd have average weather. So, I am the red splotch on the map. If you look at any drought index, Northeast Iowa has just been, the Sahara of the Corn Belt. And, our state climatologist said that we were 50 inches of rain short for the past 3 growing seasons. So that if you take the northeast third of Iowa, it's been we have not received life-saving rains in recent days, but what's impressive is it remembered how to rain and snow.
Yes.
So over Easter weekend up till today, we haven't had a total inch of moisture, but gosh, aside of some snow in January and maybe a little during harvest, we just haven't had anything. So
right.
we're moving in the right direction.
Yeah. Okay. I do want to take something from the conversation that we just had with Jim Mintert from Purdue University and expand on it just a little bit with you guys. And it's about making investments in the operation. He mentioned that the Farm Capital Investment Index, it was up 7 points on a percentage basis. That's pretty impressive because it's just at 41 on the index. But when you dig a little deeper into it, the producers that said now is a good time to make a large investment, it only stands at 15%. Ben, it doesn't sound to me like there's a lot of money being spent in agriculture.
Well, I was listening to Jim, and some of the things he brought up, the interest rates, being higher and a cost price squeeze, and what's a temporary phenomenon and who's concerned about their budget. I'd say, who's concerned about my budget right now is my banker. This year's budget is just wrangling, squeezing, drying out liquidity from my budget. I mean, it's another year growing $4 corn. It costs $5 to grow, just like 2014 through 2019. There is no room in the budget to buy new equipment. Farmers, I will die on this mountain that farmland prices are always a reflection of how much liquidity farmers have rather than the budget in any one given year. And we've had 2 years of great grain prices, but who's driving up land prices? Well, I listened to Jim talk about, farmers cite investors. Well, what happens is the investor is always the bridesmaid, and you're not going to let that generational opportunity next to you go by. So the farmer ends up paying, an arm and a leg for a farm. So equipment spending is all but shut off for me this year. The only way I'm going to buy the farm next door is if I sell something that's less strategic to me and move the capital over. My banker doesn't want to hear any noise about capital spending this year. I had to raise my right hand and swear on a stack of Bibles I wouldn't CapEx on him. So,
Did he believe you?
Jim's
even
view is
after all
correct
of
that? What do you want me to say? He's probably listening. So, I think I'm not tonight, Chip. I have a headache,
Okay.
It's just not going to happen here.
Gotcha. Glenn, you've got some unique insight into what's going on in the equipment market out there. Fill us in on that.
Yeah. I've had the opportunity to serve on a board of directors for an equipment company here in Ohio, or the tri-state area. And, how the farm economy goes is pretty indicative of farmer investment in farm equipment. If they're profitable, they're looking for something to depreciate. They want to reduce or minimize their taxes. And so you can pretty much track the strength of the economy. And the last 2 years have been just off the charts when it comes to farm profits, at least in the grain production area. And we're seeing some, not pullback so much, but I guess reservations. I think right now farmers are reluctant to buy that new piece of equipment, and they're hesitant because first off, they want to make sure they get a crop planted. We're in the part of the world that, like in 19, we just didn't get crops planted, and that's still very vivid, very, very much in their memory. So guys are pulling back. We have equipment on order. The equipment is coming in, but we went through a period of time when, we just didn't have any equipment on the lots because the farmer interest was off the charts. Well, now we're actually starting to build equipment values up and everything, and you're starting to look at the equipment values of trade-in pieces and stuff, and there's still good, strong value for strong or good quality used farm equipment. But when you look at the price increase on new pieces of equipment, of combines and tractors, those high-dollar items, that's a commitment. And I think a lot of farmers today are maybe in denial of the amount of the variable costs of production are going down this year. We've talked about that. And the impact because of working capital, that's going to change. And when you make a commitment on these high dollar pieces of equipment, that's a commitment. That's like getting married. I mean, you're in it for the game. And so it's an obligation that with decreasing working capital and inventory values, I just wonder how they're going to justify and pay for it with the increases that we've seen over the last couple of years.
Right. Right. And Ben, what I'm hearing from you is that it's really difficult to justify that.
Well, Glenn brings up a great point that, we've had 100% inflation in farm equipment in 5 years. So can I put together a economically sustainable model buying a $750,000 base combine by the time I get a Class 9 combine, 2 heads? It's going to cost me $1 million. I don't know. And then I listened, you had Machinery Pete on Monday, and, always a lot of great insight. But, Machinery Pete was talking about selling a bunch of classic round cab John Deeres and, that kind of era. That's more like talking about the Barrett Jackson auction for cars, and what F-150 going to cost. It's just two different markets. That's kind of the collector thing. What I'm seeing is on the dealer lot. They've switched a lot of customers to new equipment over the past few years. The dealers are getting used to having a few customers that buy a whole fleet of equipment. And this 1-year-old stuff is coming back at high values. And they have real interest rates to keep that in their inventory. And I think that you're watching the online platforms move a lot of this because they simply have to turn it into cash. Yeah. And the auction values are a whole lot different than the listed, the what we call dealer protected margin value.
Right.
So,
right. Yeah. Inventory management for the dealers has become issue number one. There's no question out there. So,
but I'm in the area of the world. Sorry about the backyarditis in advance. We only had 5/8 of a crop. And so there's just no money in the budget to do any purchasing right now.
Right. Okay. I'm going to switch gears before we get to the break. Not a lot of time, but we need to do it. Ben, let's stay with you. What did you see in the prospective planning, the planning intentions report that caught your attention?
6 million less acres. And okay, everybody's saying, where did it go? And I'm saying, why is this report inaccurate and the last one was? Maybe the situation is we overstated last year. Chip, I don't know if you have any experience with running a crop tour and going out and actually counting ears and kernels and fields and acres, and then the government just prints a number that becomes the magical right answer. I mean, maybe this year's plantings are correct, and last year was kind of overstated.
Yeah. Yep. You've got to make those comparisons year to year, no question about it. And then you go back to 2022, which had its own unique set of circumstances, and it was down around 310 million planted versus the expected 313.5 and a year ago at 319.6. So it's all unique. We're going to continue the conversation on this week's Farmer Forum. Glen from Ohio, Ben from Iowa, here on AgriTalk.
When news breaks, the newsmakers talk about it on AgriTalk with Chip Flory.
Welcome back to AgriTalk. I'm Chip. We are in the middle of the Farmer Forum with Ben Riensche from Iowa, Glen Newcomer from Ohio. Glen, anything in the planning intentions that you want to put in the spotlight? It looked like the Eastern Belt seems to be favoring beans over corn compared to a year ago. Is that right?
Yeah, and I think that's basically because the previous year before that in our area or in our part of the world, the corn acres really didn't get planted. And so there was an expansion last year of corn acres. And to get rotations back on track, I think some guys are pulling back a little bit on corn. I see it in our area happening. There's definitely going to be more acres of soybeans. So when you look at the report that was out, it really didn't surprise me that much. I actually thought the corn acres would be a little bit higher, but I'm one of those skeptics that I honestly, just what like Ben said a little bit earlier, I concur with his observation. What is that number? Is it? I just think so. I'm very skeptical that USDA, when you're taking a survey, I mean, farmers realize when they're answering a survey, they don't want to put in a high number. So, to me, that number is a low number. I think that number is going to grow over time. And if we have favorable weather, farmers like to plant corn, and that corn is going to get planted. That's my opinion. So I think that corn number is the lowest it's going to be.
Okay. Well, Ben, the bean number might be the lowest it's going to be. The combined total on it is like 176.5. Both could go up.
Possibly, yeah. When I looked over the numbers, it looked like a lot of the reduction in corn acres came outside of the core corn production area that the Midwest Crop Tour covers, and so, low prices beget low plantings. That's where we saw the cuts. In my area, back to backyarditis, we've had once or twice in a lifetime chance to be in the fields in March. There's already a lot of ammonia on that. Those acres are not going to shift. We've had a lot of extra time for tillage last fall and again already this year.
Yeah.
So, I don't know how many more corn acres you could get in my area, but who knows? It could rain till the 1st of June, and then we put in our first seed, and you'd see, bean acres maximized. So
that's right. All right, Ben, what else is on your mind? What's got you thinking? What's got the gears turning?
Well, inflation, Chip. I mean, it's just everything. And once again, Jim, in your prior segment, talked about, all the pressures and the view from 10,000 foot up, but it's just strangling. We shopped property casualty and titled vehicle insurance. Not too long ago, we were facing $100,000 a year increase for our farm. And so we had to make some changes to avert that. We've changed some of our coverages. Our labor situation remains tight. I mean, demographics, boomers. Actually, where I live in a populated enough area that boomers getting squeezed out of their day jobs kind of creates a temporary workforce I can use in planting and harvest.
Yeah.
But it's not getting easier. Our H-2A labor that our farm uses just arrived, and their stories about they're all from Europe. Their stories about tractorcades in Europe and in Germany and in the Netherlands, Ireland. It doesn't sound like, if you think it's not fun here, it's really not fun in Europe to farm.
That's right.
One of the great compliment I got from our Irish H-2A was I came halfway around the world to farm like a real farmer. So.
Cool. One of the other observations in the barometer this last month, 80% of the respondents said that they are concerned that following the fall 2024 elections, that government policy will affect their farms in the year ahead. 43% of the respondents think that the regulations impacting agriculture will be more restrictive. Glenn, does concern like that make its way into your long-term planning?
I don't know if it goes in long-term planning, but it is an election year, and weird things happen in election years. I'm hoping we don't have a black swan event that collapses the markets. My biggest concern politically and stuff is some of the regulations that will affect the livestock industry.
Yeah.
With the recent things that are going on in the chicken or in the poultry industry and in the beef industry, if that demand is eliminated or reduced, not eliminated, but reduced significantly, we're on a house of cards as far as the carryover stocks of corn and our supplies. And, if corn goes down, beans going to go down as well. We're in a sideways pattern right now in these trades. I hope we don't find the floor again, but I guess what I'm hoping is we don't have a black swan event in 2024.
Yeah. Yeah.
Are you sure, Glenn, we didn't already have it with avian flu moving over from to a few cattle and one human? I mean,
well,
part of the pandemic.
That's
right?
what I was. That's kind of what I was referring to with some of the stuff recently in the news. It's going to have to be monitored, and it's all going to, I think, depend on whether it spreads. It depends on how the media blows it up, how it's perceived by the consumer. You know, in the end here, there might be some restrictions that come in place as a result of that, and it's just hard to tell how it's going to affect those industries. But I would, for both those industries, I would be very concerned right now about how that's going to be perceived in the public, because, you know, the media has a tremendous amount of influence on consumer purchases.
Yeah. Yep. Great point, Ben.
Well, do you, you know, this is like a match to Tinder here. I mean, I think we've got to get a farm bill. And the reason why is I see two very distinct futures. One, under the leadership of one party, you know, we're going to reinstate EPA funding, so we don't have state by state regulation of you know, how our soil and water resources are managed, about carbon and renewable policy and things like that. And the other road is I fear it almost being weaponized. You know, that we're going to have people with no ag background come and dictate policy out of the little archipelagos that vote the other way on tell us how to farm.
Yep. Legitimate concerns, Ben. No question about it. You guys, fantastic job talking about the issues that we need to be talking about. Thank you guys so much. That is Ben Riensche in Iowa, Glen Newcomer over in Ohio. Thanks for listening. We got Clayton Pope this afternoon here on AgriTalk.